morning once again, and welcome to the Haven Financial Group radio show. Thanks for listening. If you're looking for more information, if we're bringing up ideas or questions on any of these key retirement topics that really can transform your financial future, feel free to give us a call, 612-504-8400, havenfinancialgroup.com. Check out our website. We got a great community website. We got clients that share this month recipes, their favorite 2 recipes in their life. And it's just really good interactive website. And then, of course, all our classes. Of course, we have our new education center that we have at our office. Check out all the classes we teach. We're big into education. It's how we learn. Because I always ask over the years, how many of you remember growing up all the classes that taught you how to make all the perfect retirement decisions? And I never get any hands up. So you can either do it yourself. You can ask, you can find anything you want on the internet, whether it's true or not true, or you can come to classes that teach, and we've been teaching a long time, and we will continue to teach because there's value in getting the education. From there, it's whatever you do with it. I heard somebody say education is the potential for power. It's what you do with it that really matters.
Absolutely. We've been talking this morning about saving for college, whether you're saving for your children's college education, maybe it's your grandchildren's college education. We've talked a little bit about the expense of college and how it just continues to go up. And moments ago, we talked about 529s. And there are other ways to save for college, even though a 529 plan is certainly a good one to look into. Kyle Thomas is with us. He's a certified financial planner there at Haven Financial. And we want to talk about universal life insurance for college and then also other expenses, because this can be used for a number of things. Kyle, this is something when I was saving, my husband and I were saving for our kids. This was not something that was ever brought to our attention. So let's talk a little bit about it. Is this something new that people can do now and save in a life insurance policy for college?
Yeah, a universal life insurance policies, they've been around for a really long time, but the strategy of using this for college savings is kind of a newer thing, and it's grabbing a lot of attention. And the way it works, it works like a universal life policy. So you have flexible premiums, and there's a cash value component, and you can earn interest at a fixed rate. And the death benefit can adjust over time. But there's also another type of policy that's called an indexed universal life insurance policy. And this links the cash value to a growth market index, like the S&P 500, for example, rather than an interest rate like the regular universal life. So why would you do this? Well, it offers a potential higher return. So you could have a higher amount that would build up inside of that policy. And it also protects against market losses, right? So you can't lose anything in it. Your floor is 0, even if the index that you're linked to is -20 for the year. So that's a benefit right there for you. Some of the other benefits of these policies is the withdrawal piece, right? So similar to a 529, if you're using it for the college expenses, these loans or withdrawals from the policy themselves are tax-free, right? So that's a really flexible, option for college right there. Vice versa with the 529 on education expenses and withdrawals. 529s, like we stated, you have to pay penalties and taxes for non-qualified expenses. Index universal life policies and universal life policies, there is no penalty for doing so. You can use it for other expenses as well. There's no discrimination on that part. Another piece, we mentioned that 529s show up on the FAFSA, and there is benefits for grandparents owning it for FAFSA. But index universal life and universal life, it does not show up on the FAFSA. So if you have $100,000 in a universal life policy and you're using this for expenses for college, that is completely off the record for in terms of your FAFSA application. So there is, a few more benefits to this, and it is an insurance policy as well. But the fact that there is a death benefit associated to it means that you're getting a return of principal, right, or a return of some sort, right? We don't want to just put something into a policy that there is that's like a use it or lose it. I don't like that. I want something that we can actually get something out of. And as long as we're planning for a use of some sort with that policy, it's a nice tool.
Sure. Is there a minimum amount that you can pay for this, or you can put in at one given time? Or is there I'm assuming that these policies, I'm assuming that there's one price that you pay consistently, right?
Yeah, and it depends on the policy, because it is an insurance policy. So you're solving for a certain amount of funding, essentially, right? So then your premium would be based off of that. However, this is a universal life policy, so your premiums are flexible. You can adjust those to however you want them to be. It's just the amount of benefit that you receive from them changes based on what your premiums are. Sure. And one downside, for those premiums is over time, to keep the policy funded, those premiums could increase to keep it funded to that specific amount, right? If you wanted 100,000 of your death benefit in there, to keep it funded at 100,000, those premiums could increase over time. But you have the choice and flexibility to choose what your premiums are, which is, something that can really be impactful, because, what if one year the income in the household is a little lower than previous years and you can't afford the same kind of premium that you paid last year? Well, you can just lower it for that 1 year, and then the policy will adjust, properly accordingly to what your premiums are. Are
there limits?
There are no limits on this, so you can put as much in there as you'd like, and you can also use these for retirement savings if there is some left over as well. So there is planning beyond just the education piece. You could keep this policy going after college and into your 60s and 70s, and use it for retirement planning as well.
Kim, takeaway from this segment, I think, would be, most people don't think of life insurance as a tool for college planning.
Right.
But when structured right, it can be one of the most flexible and tax-efficient strategies available. So whether you're looking to fund education, as we're talking about, protect your family interests if you pass, or build some supplemental retirement income, you can use the life insurance, index universal life, or really any life insurance. Is it appropriate for you? I don't know. Can it be valuable information? Yes, but I'll take it a step further. Glenn Ramey at our office, he's been on our show quite a few times. He would be the one to talk to in this area to see if it's the right thing. In addition to that, we're really going to stress in 2026 the importance of folks that we sit down with, clients, listeners, if you so choose, to do a life insurance review. A lot of times people have had life insurance policies for a long period of time. They haven't really paid attention. The policy has been on the shelf. They haven't reviewed it. The one that sold it to you got paid a commission 20 years ago, and you don't even talk to them anymore. A life insurance review is so important because oftentimes some of those policies, by the way, they're not all created equal. Do you have a universal life, index universal life, variable life insurance, whole life insurance? And if you don't know, you should know, they don't all work the same. Sometimes these policies eat themselves up, they cannibalize, and all of a sudden now, wait a minute, this life insurance plan that I thought I had didn't do anything that I thought it would do. And that's why we're really going to stress life insurance reviews beginning next year to make sure you don't fall into the position that we see every year. Oh my goodness, I've been paying on this and now it's going to lapse and now it's not going to do what it's supposed to do. And that is not a good feeling. So let's have that discussion now. Be proactive, because not reactive probably is not going to work.
No, right. That's throwing money down a rabbit hole, and that you definitely do not want to do. 612-504-8400. It's 612-504-8400. If you're thinking about, how you're going to start to save for college, or maybe you're a grandparent who would really like to save and help your kids pay for their kids' college education. That's what we're talking about, and a number of other things. But maybe you need some questions answered. Give them a call here at Haven Financial Group. It's 612-504-8400. Or if you're somebody who has a life insurance policy and has not looked at that for years, give them a call. Bring that in. As Larry said, it's going to be one of their big goals in the next year is to make sure that life insurance reviews take place on a regular basis. All right, when we come back, wealth stability and family finances. This is the Haven Financial Group Radio Show.